started with a gap up, kept getting better, and towards the end, Nifty crashed. Today it was not FIIs, but it was action from Ukraine aided by US. Bank Nifty was not any better, the similar graph. And I'll tell you one very funny thing. When Nifty was going up today, most retail would have been unhappy. The reason is most retail is sitting on the outside and there would have been regret, pangs of guilt that I should have bought yesterday. Maybe Nifty has bottomed out. And when Nifty fell today, then most of those people would have laughed, it is good that I did not buy. And while this trading range was 1.3%, if you look at these swings, this was again nearly 3% swing for the day. In the Nugget section today, I'll talk about gold investments. A lot of people are looking at gold as a hedge right now, and no one right now wants to put money in cash. So I'll talk about the possible instruments, specifically SGB, and what I am planning to do. In fact, I took some action today. Nifty 50, the heat maps are looking still similar. Overall, 27 stocks up, 23 down. Most people will take it under current circumstances. The greens increased. We have HDFC at the top, followed by M&M, TCS, Sun Pharma, and Infosys. But Wipro, Tech Mahindra, Eicher Motors, HCL Tech, they are all in the green right now. The bars also, the green ones were stronger than the red ones today. As a result, Nifty was a little in the green. It would have been a lot more greener if the missiles were held on for maybe 2 more hours. What was pulling down Nifty most was Reliance back to the bottom, SBI, Bharti Airtel, Larsen Toubro, and Maruti. Next 50 today, the greens were better than yesterday. Good volumes for nearly all of them. IRFC, Varun Beverages, REC, PFC. Now most of the red companies are of the Adani pack. Adani Energy, Adani Total, Adani Power, Adani Green. So while the noise may have died, but George Soros and Hindenburg have probably succeeded because the stock price of these companies have plummeted. After several days, the graph is looking better today, slightly in favor of bulls. 3 of the strong sectors were on the bull side, 2 on the bear side. The worst today also was oil and gas because Reliance was down a lot. The next verse was insurance, followed by metals, which came under strong profit booking. Now, if you look at the trend, then beverages, auto, banking, they have all been doing off late very well. In fact, today I got the chart for the hotel sector. IHC is in green zone right now. Jubilant Foodworks has probably been doing well right now because Berkshire Hathaway has invested in Domino's in the US and Jubilant Foodworks holds the rights for Domino's in India. Also note that Devyani International is now run by Varun of Varun Beverages. Look at the volumes of Nifty top 16 stocks. The resemblance is uncanny today. Nifty, Bank Nifty, Reliance, TCS. Literally everyone fell in a heap at this point. No respite. All big players, HUL, ITC, HCL, Infosys, which was up whole day, that fell. ICICI, SBI in any case was going down only. Only HDFC Bank stood strong. Volumes plus 96%, nearly 2x. Besides HDFC, there was nothing in Bank Nifty. Overall, private sector banks were more on the green side if we look outside Nifty. The reds still continue. Federal Bank hit another high. IndusInd and Ujjivan, they hit another low. But good volumes, some buying returning to private sector banks. Public sector banks, SBI and Bank of Baroda were really weak, but the smaller banks were doing better. Indian Overseas, UCO, Bank of India, strong volumes on PSU banks also. What was looking good even at the end of the day today was investment pack. This pack has been beaten down a lot in the last 2-3 days and it recovered pretty well. Here also the day did not end well, otherwise this sector was doing really well today. The PSU NBFCs were on fire today, PFC, REC, IRFC. Good strong recovery in IT today. Minor cuts in HCL and Swiggy, rest the sector was good. Auto also, Maruti, a small red, otherwise the sector was looking pretty good. Hyundai up 6% today, Mahindra 4%. Good strong gains for the large players. In fact, if you see, most of these players cracked a lot towards the end of the day when Nifty fell. Lot more than the fall in Nifty. Otherwise, this sector would have been a star performer today. On the upside as well as downsides, auto ancillary does better or worse than auto. Today, every stock was doing very well. Despite the fall towards the end, the closing numbers are looking good. Defense also, every stock was doing well. Data patterns 6%, Cochin Shipyard 4.5%. Yesterday, metal companies were dancing with joy because of the China factor. Today, probably all of them realized that the joy was overdone. Everything corrected. In fact, most metal companies started around the top of the day. I have stopped figuring out the reason, but Oil India is totally different company than ONGC, and that was up today 3%. But when Reliance is down 1.5 2%, this sector will be red only. If you look at Reliance closing price, then pre-bonus this price is now less than 2500. Now Vari and Premier Energies are driving investors crazy, up 7% one day, down 8% next day. Most investors will tire soon and move out of these companies. Very hard to trade. Volumes are good for the power sector. Edible consumption was looking good today also. Varun Beverages second consecutive day 3.4% up today. 2.5x volumes, 1.75x volumes, 2x volumes. Some interest returning to consumption. Non-edible was a mixed bag today, however no major cracks. Kalyan Jewellers was on fire today, closed at 5% up, but its sibling PN Cargill made a new low. The volumes on Asian Paints are reducing now. At least the sellers are vanishing. Finally, a green day for Nifty, up 0.3%. Bank Nifty up 0.5%, third consecutive day. Nifty IT also was looking good. Energy down because Reliance was down. Next 50 had a fantastic outing today also. Suddenly market trends are looking good. Most people won't even realize before seeing this that there are some winds of change probably around. Now this could of course change with the holiday tomorrow. One is the election uncertainty. Second, what will happen in Ukraine and Russia. Now one more thing which most people would not have realized, FIs have increased stock future longs to 60%. FIs use FNO very effectively. Most people are seeing FIs selling. See today also they sold in cash 3500. That's 3500 crores. DIs, I told you as soon as elections are done, their purchase size will shrink. Less than FIs today. Now looking at the red numbers floating around everywhere, even at government level now, the noise for rate cuts is growing stronger. RBI governor's term is ending on 10th of December. Two things might happen. His term may get extended once more for the third time, or we may have a new governor. A decision could be taken somewhere around that time. Bitcoin is going crazy today also. It is hovering around 92,000. That is primarily because there is speculation that $5 billion worth of Bitcoin shorts need to be squared off, and people are talking about 1 lakh maybe in a day or two. Nifty levels were all over the place today, and Tesla was up yesterday, again another 6%. These are yesterday's numbers. Today gold is comfortable around 75,500. Silver also is comfortably above 90,000 today. Both metals shining. Brent has gone up a bit but still below 73. Rupee is still around 84.4. My trades today, I sold off Kalyan Jewellers. It had gone up a lot and there was a little profit. 50% quantity still remains and I bought gold ETF. I'll talk more about it in the Nugget section. Overall, it was a profitable day plus investment as well. So there is huge chaos going on everywhere and people are looking at where to hide. Today I'll talk about gold as an investment, as a hedge. If things go wrong, then where to hide your money. You could hide it in your cash account also, but most people don't want to do it, and I am one of them. Long-term candidates, of course, if you are looking at gold as an investment, you have physical gold and SGBs. Yes, SGB, you don't have to wait for new tranches. New tranches may never come. But you can go and buy the old tranches at a slightly premium prices. They may be 3-4% expensive than market rate, but then the returns are tax free and you are eligible for the annual payout of interest also that government gives. As a hedge, I would say there is only one option, ETF. You can buy SGB also. Problem with SGB is SGB does not fall when gold rates reduce in the market. So buying selling is a little tricky. Now I have highlighted HDFC Gold ETF performance just for illustration. I am not recommending you buy HDFC Gold ETF as a preferred one here. In 1 year, the scheme has given 28.9% return, 3 year 16.8%, 5 year 13.5%, 10 year 10% nearly. In all these periods, the return is significantly better than fixed deposit, and of late, this is actually better than what you would expect from equity in general. In fact, this is a pretty old scheme since around 2010. Since inception, it has given 9.53%. In 14-15 years, this is a fantastic return. Most people will take it as a safe investment. And now if you look at it long term, even the tax rates are a lot better, 12.5%. On fixed deposits, you will pay 33-34% if you are a high earner. Now, what is my theory and what I am doing about it? In November, my first tranche of SGB matured where I had invested as a hedge. Last year I had moved some money and I got I think 17-18% as a return on that, and that is tax free because I held it till maturity. My expectation was there will be uncertainty in November. And yes, there is uncertainty in November. Equity markets are shaking right now in India. I expected US also to be shaky, but that shakiness is probably going to happen somewhere around Jan-Feb now. In November, December also, I expect a round of profit booking coming in Nasdaq and Dow. That is because there is a lot of profit on the table. People have not booked profits. And Thanksgiving is next weekend. I do expect something to happen. Somewhere around 20th of January, the governments will change in US. In February, we will have the new union budget, and I am expecting it to be disruptive this time. We are also talking about a new income tax code also coming in at some point of time. It may be introduced around the budget, in the budget before that. The government is not spending the money right now. That will lead to A, low fiscal deficit, B, slowing down in the economy in general. Next year, when we start Q1, that is 2025 Q1 in April, there are 2-3 things which will happen. The sovereign rating of India will improve internationally. As a country will look strong because the deficit has reduced. Also, any numbers in Q1, Q2 when we compare it to previous year, year on year, they will look better for sure because these quarters have been not so good this year. So stock markets like year on year comparison, they will rate these quarters as very good. Government will have lot of money here to spend. RBI in any case is expected to give even better than dividend bonus than last year to the government. Government has just revised yesterday the rules for PSUs. Minimum 30% they have to give as dividends to stakeholders. Who is the biggest stakeholder? Government. So somewhere around here, the chaos in Indian markets should at least reduce, and we should have lot more clarity on policy action, income tax rules, which classes of assets are becoming good, bad for investment. Till that time, there is uncertainty. November is nearly gone. December, January, February, March, 4 months of uncertainty. US markets expect to at least go for profit booking. I'm expecting a 10% kind of cut at least in the markets in general. Now, Nvidia results are tomorrow night. Expectations are literally 90% steep. Anything less than a fantastic result will be beaten down by a 20-30% fall in Nvidia. Nvidia's fall will rout Nasdaq. That may have a cascading impact in Indian IT. One more event which is expected somewhere around this time is that rupee will move towards 88 to 90 levels. That is because rupee will weaken compared to dollar. Dollar will strengthen. That is why rupee will weaken. And our trade deficit also is ever increasing. So that will be good for IT somewhere after Jan, Feb, March. We'll have a decision on crude also probably somewhere around December end when we have results in January end for oil marketing companies and all. I expect their results to be lot better than previous quarter. So a lot of things will happen at Jan end. Banks will not fare well at all. Even if you cut rates, consumption will not increase because people don't have money in their hands. The borrowing is already high. You may produce cheaper, but that benefit never goes to the consumer. So if there is uncertainty, then gold goes up, Bitcoin or crypto may go up, but that has an international factor associated with it. In any case, I'm expecting crypto to go up. It is very hard to trade in crypto in India, so that is not something I talk about at all. Silver also will go up, and of late I was investing more in silver than gold. Right now, I expect yellow metal to be doing a lot better than silver for the simple reason that US government, the new one also, will have vested interest in gold remaining high. US has the largest active gold mines in the world. One good part of how I am playing out right now is I am putting money in ETF, and I bought 10 units worth of gold today. Moved most of the money which I sold yesterday also into these units. The good thing about this approach is I can liquidate it any day and use it the same day also. I expect 8 to 10% kind of gains in gold in next 2-3 months if I don't take money out of this particular hedge. Let me know in comment section what you are thinking right now. Are you planning to stay invested in equity or you are also planning some hedge? For 2 months, cash is not a bad option if you are convinced with cash and not convinced with gold. Hope this section was useful. Thanks for watching. I will see you on Thursday. Tomorrow markets are closed.